good afternoon. How are we all doing? Afternoon, David. Afternoon, Peter. Happy Monday. They're a band. How are we doing? Afternoon, Fletch. So we're going to do usual stuff today. Look at the indices, trade the indices. It's absolutely baking here. I've got a fan on, so if it's too noisy, apologies for that. I'm really echoey in here still. But anyway, not a lot I can do about that at the moment. Afternoon, Virginia. Brian, how are we doing? So just quick update on this morning. We had a fairly decent morning. We basically broke up on the FTSE. Nice clean break on the FTSE, straight to target. Second half stopped out on trailer. Nice clean break up on the DAX. I took the DAX off basically. It wasn't going anywhere. So basically we hit this area and we just couldn't get through. So as that started to drop again, I decided to close it. So I took a small profit on the DAX this morning. I was expecting, well, hoping for the gap fill, but it didn't get there. So I took that off basically. I'm glad I did because it broke straight down, triggered a short and stopped out. So DAX, I don't think was profitable today. What do we make? 412 and lost 440. Yeah, so DAX pretty much break even. So all the money made out of the FTSE this morning. US indices. So, blimey, NASDAQ's busy. So we had a gap fill basically this morning. We looked at it in the members in the live stream this morning. The gap fills are done basically across the board, as you can see. So all the gaps are filled. So it's basically see where we go from here. This morning, we've had the Fed come out saying that potentially they're not going to be reducing interest rates. So Hammock came out this morning, or Hammock came out this morning and basically said, I don't see any imminent need to cut rates. Basically, there seems at the moment to be in the Fed two groups, if you like, the Powells and the Hammocks, who are logical and go, yeah, if we start cutting rates, it's really going to hurt. And then you've got the Trump pleasers who are up for cutting rates. So it sort of changes every day at the moment, doesn't it? But we'll see. So we've got at the end of this month, I think it's July the 28th. Let's have a look when the Fed rate announcement is. Where are we? No, it's not. It's 31st of July. No, it's not. 30th. Sorry, close. So that's when the rate statement is, or rather the Fed fund rate. That's when we're looking to be basically changing. So we've got a couple of weeks to go until we actually find out whether that's going to happen or not. So lots of toing and froing. Powell might be out of a job by then. We never know. Afternoon, Sebastian, Mayor, check. How are we doing? So yeah, we'll see where we go. Right, let's have a quick look at where we are. So triggered short on the NASDAQ. That's putting back inside range. No trade on the Dow yet, and the S&P was too narrow range by about 10 points. So no trade there. Big rejection to the upside on the NASDAQ. All bear candles basically at the open. So the first 5-minute ranges have all gone in bearish. But that doesn't mean we're going down. So we'll see. It doesn't look like we're actually going anywhere. So I'm going to stop out on the NASDAQ in a minute. It's playing with me. Yes, stopped out. So stopped out on the NAS. So where are we going? We've got 3 minutes left on this candle. So that's your 5-minute range. Obviously, the 10-minute range is going to be pretty much the same on the NASDAQ. And obviously, we are inside bar at the moment on the Dow. So market's not really got any directional bias at the open. Other news this morning, apart from that, no cutting rates. There's not really been anything today. So it's a very quiet morning for news. There's no forecast news today. It's bank holiday in France, so that's it. So there's nothing happening today at all. We kick off tomorrow with CPI for the Canadian and for the dollar. So I would suspect potentially the market's going to want to stay in rotation today. So selling the highs, buying the lows, because you don't want to be dumping tons and tons of orders into a market just before a potential interest rate comes out. Inflation figure comes out, because obviously that is going to be guiding the interest rates. So if this year-on-year figure does not go up and stays at 2.4, or better still, comes out lower, that will get the interest rates down at the end of this month. So the Fed will be under even more pressure. So I guess most of the Fed are probably sitting there going, I hope that comes out at 2.6 or higher, because they don't want to drop rates. But obviously you need to look at all the figures. The forecasts are all for this to go up. So market, I suspect, is not going to go running for the hills today, but we'll see what happens. Say we've broken long on the Dow. It's very, very choppy today. I don't really trust that to break long, but we'll see. So targets wise, obviously you can see we are kind of dropping a little bit at the moment, but we are at support basically. So this is previous monthly, last week's low, which is where we opened. The market's kind of rejected that straight out the bat. So maybe a break to the upside to come back up into here and stay in rotation is on the cards today. S&P, we're up gap fill. So there's nothing really you can read into that. We're kind of in no man's land. There's your high, there's your low. We're bang in the middle. Nothing directional wise at all on that. NASDAQ, very much the same. So that Friday low is not the low of the week. Let's go out a bit further. So the low of the week last week was from Monday. High of the week was Wednesday. We're bang in the middle. Yeah. So we are very, very rotational at the moment as a market in the whole. But obviously, we don't really pay too much attention to directional bias, because obviously every day is different. But it's a bit of a mixed bag today, isn't it? That Dow break long is definitely on. Well, the NASDAQ does look like it wants to go short. Tricky. So absolute whipsaw. Nothing we can do. Good afternoon, FTNet. How are we doing? So the Dow's rejecting the highs at the minute. Market feels heavy. Feels very heavy today. I'm going to short the NASDAQ. I'm just trading my Top Step account as well at the moment. I need to put some big numbers in on this, because I really screwed up. I accidentally banked $3,800 in one day, which means I can't now pass the evaluation because I made too much money. Shocker. But screwed up the evaluation basically, which is annoying, because it means I kind of need to make the same amount of money each day to get past the evaluation. If this breaks down past the, this is obviously where we've opened. If this breaks down below here, we should be able to get a run down in to test this area. This is one whacking great propulsion gap from this morning at the open of London. So that's the London Open. Basically, we pushed straight up, sat around all day. We're either going to go test the highs or the lows of the week, I think. Add a bit more sizing on that. See where we go. Okay, so we've broken short on the NAS. Short S&P, long Dow. So either that, all that is going to stop out. It's very, very unusual for the markets to take different directions. Sector purchases usually means you generally tend to go in roughly the same direction each day on each index. However, the Dow is a little bit more divergent at the moment, so selling off nicely. Okay, so there's the area on the NASDAQ. So this accumulation from today, basically, we've managed to hold this level. So if we break through that, we're going to come back down and test this propulsion gap low, I would imagine. My partial close is about to get closed. Blimey, that's a quick profit, isn't it? I'll take that. So the Dow, basically, I kind of want to stop this out. I don't want to trade this Dow. I'm closing the Dow. Very small loss. This might be the wrong decision to make, but the weight of these markets, I can't see the Dow rallying today. So I'm just going to take a small loss on that Dow. I can't believe that thing's going to fly with the others collapsing. Just not normal. It's holding up though, isn't it? So maybe that was the wrong choice, but for me, that doesn't look like that's going to be able to rally. He says, as it pushes straight back up, look. Blimey. What a mess this lot is today. Okay, we've got 1 minute left on these candles on the 5-minute chart. So that low's holding up at the moment on the NASDAQ. If we can get another sell order in on this, we should be off. Really close to a partial as well, isn't it? I'm just going to move that up just to make sure I get that partial close on. I don't like the look of this Dow. I can't believe these are going to go in the opposite direction. It's not the norm. In fact, I'm going to cancel that off. I'm calling it a day on the Dow. I don't like it when we're divergent like this because you can't. We're off in different directions. One of these is going to be, look at the strength of that, strong, and drag the other back. I just don't know which one it's going to be. So for safety's sake, I'm going to leave that off the table. Partial's banked on that. Money's in the bank. So we'll see if we can get a runner on the Dow, the NASDAQ and the S&P. In fact, I'm just going to protect that S&P at break even as well, just in case this thing flies back. Look at the strength of the Dow today. Unbelievable. You know, you get these sessions where you just look at it and you think, this thing's all over the place. And before you know it, you've put another bull candle in up here. You're back up here within 5 minutes. It's one of those days where this thing's absolutely all over the place and can go absolutely anywhere. So you just take the money when it's there, protect it as fast as you can. Never trust the market. But that would be my target, definitely, if we are going down. Let's have a quick look at FX side of things. I went through everything this morning in the member stream, in the live stream this morning for London. FX is all over the place as well at the moment, but it usually is. Oil. I set an alarm here on oil this morning to take a partial profit on this lot. As the alarm went off, we basically looked like we were pushing straight through that weekly high. As it actually happened, we pulled back for an hour and then broke through. And I was like, brilliant. That's exactly what we were talking about in the live room this morning, what I was expecting to happen. And I was expecting a rally up on it. we dropped for 2 hours straight after that. So I didn't get any of that off. So I've still got the position on. I still think it looks fine as a long. Market structure is still bullish. Yeah, so this pullback potentially is just a pullback on this leg from Friday and then continue up into this propulsion gap here. This is where I'm looking for the market to go with oil. But at the moment, that is a hell of a sell, look, that we've just had go in there. It's a lot stronger than all of the other pullbacks we've had in 2 hours. So it's a very, very strong pullback going in. I'm hoping that this propulsion move from Friday towards the end of day is going to be an add point for them. So that will be a market structure pullback for a new long. So this is exactly where I would expect if they are going to add, for them to add sizing. So we'll see where we go. But that's just annoying that it's pulled back that far, because I was expecting to sort of be sitting around up here this afternoon, and I'm not. So we'll see where we go. Aussie New Zealand was the only ADR this morning, and Euro New Zealand, these are not ADR hits. This is basically just a broker candle. It's a broker gap down. So it has come off of 150 ADR. So if you did take it, you're in profit, but it's not really an ADR reversal, because this price action here is just kind of gap and spread. The Euro New Zealand also same, big gap down straight up to the gap fill. So this is the real price action of the day. It kind of is almost an ADR. We looked at it this morning. It's 100 pips. It's 120 ADR. So it's almost an ADR, but nothing really to write home about. RSIs, we had an RSI on the 4 hour this morning, which we still have actually, which is obviously looking like it's potentially, again, we've got divergence going in. Basically, we've got a lower RSI and a stronger price action, but this is a squeeze on the Swiss franc. We looked at this in detail this morning. So that was an extension. I think it's kind of going to extend again. I think it was on the hourly as well. No, that was on Friday. But the only other extensions we've got are pound CAD and the pound odd now on your 4 hours. So pound CAD extended to the downside. We got this nice weekly level we looked at this morning as a potential bounce point. I'd much rather see it down there. You're going to get a lot more support down there. Down went up. Is it gone, is it? Yeah, there we go. So stopped out. This is what I was worried about. Look, bang, straight back inside range. That's really going to help my prop evaluation. I'm about to blow it. Certain days of the week, you just think, why do I do this? It's one of those days where it's just all over the place. Look at the size of these candlesticks. I mean, look at this. How big and bearish is that? No, it's a bullish engulfing. Can't trade this. You cannot trade this price action. It's all over the place. Signals in every direction every 5 minutes. So yeah, so Dow's gone. So that was the wrong choice to get out of that. I don't care. That's me done for the day, basically. Although I've just taken an S&P long, which I do not want to do. I'm just going to get out of this S&P. I don't want this on. I'm going to try and wait for it to get back to break even. Basically, it's absolutely impossible for these two trades to work out, obviously, as you can imagine. Yeah, these two move in sync with each other directionally. I cannot be long and short at the same time. It's a hedge. One of them is going to stop out with 100% guaranteed accuracy, possibly both. So if this pushes up there and stops me out, that will break out, and then that can pull back down and stop me out there as well. So I do not want to be in both of these. I want to be out. I'm going to stop out on the NASDAQ, I think. So I'm just waiting for this to get back into a positive territory. Just seeing what the NASDAQ does. Okay, so flat on the S&P, flat on the Dow. I'm cancelling that buy stop on the NASDAQ. That's it, done for the day. So, yeah, That's the hardest way in the world to make $1,500, isn't it? Absolute mess. So I'd love to see this all completely tank now because I've got this short on. But I suspect this is possibly going to stop out as well. This is absolutely all over the gaff, isn't it? So yeah, coming back to the FX side, pound CAD extended to the downside. We looked at this one this morning. It's holding Friday's low very, very nicely at the moment. Hourly chart. Yeah, we tried to break down, immediately came back up. We've been holding that Friday low, which is the low of last week, all morning, basically. So it's nice extension on the hourly, 4 hourly, very nice extension. We got down below the 20 level. Again, 80-20. We talk about these levels all the time. They are incredibly reliable for mean reversion. Yeah, it's not often you get outside these levels and don't find yourself coming back down very, very, very quickly. So this is a beautiful long at the moment. You've got this lovely little backup from last week, and then you've got a double monthly low coming up at 150 ADR. So if this does turn into a kind of a little bit of a flag break and drop, you've got a lovely extension that you're going to be in again by the time we get down to there. So this looks like a lovely long opportunity at the moment. But we've got the Canadian numbers coming out tomorrow. So need to be aware, obviously, CAD CPI is hitting along with the US CPI. So these two obviously move in sync. If these both come out higher than forecast, you're going to get a massive rally on the Canadian dollar and the US dollar tomorrow, which means that this thing is going to come screaming down. So this does look like a lovely long opportunity. But if tomorrow you're not out of this trade, be prepared by lunchtime, you could well be back down there again. We'll see where we go. But that's extended on the 4 hour. We've also got the pound odd, which got kind of stalled out this morning. Again, this is holding Friday's low very nicely at the minute. Just not really getting any traction. So the pound has got no reason to go anywhere at the moment. So it's a lovely level. We looked at this again this morning. It's a beautiful level for rejection back up inside the range. This is an absolute textbook range. If you want a range and you want to put it in a textbook, there it is. Yeah. So this is the last 2 months worth of price action. We are literally just bouncing around inside this area. So that's where everyone has been buying it for the last sort of 3 months. This is where we are. We're very extended. Market requires a correction. You've got beautiful propulsion gaps to the upside. It's just perfect. So looks lovely. Hourly as well. We were extended on Friday morning. So if you took that one, obviously you would be scaling in now. But there's your target. About 125 ADR. Loads of room. So that's it. That's all you've got from a target, from a signal perspective on the FX side of things today. Glad I got out of that. 3-bar reversal going in. Not that you could call this a 3-bar reversal. That is some weird demonic candlestick followed by indecision, followed by the bears. So technically that is an absolute textbook 3-bar reversal. If we close down below that low, that is again textbook. But that is not textbook, is it? This, whatever this is. Fun day. I suppose you should laugh. If you can make money in this type of market, you can make money anyway, can't you? So you've got 3.5 minutes left on this candle. Where are we? 5, 10, 15, 20, 25, 30. So this is your 30-minute range going in. So this is the initial sort of balance, if you like. So I'm just going to need to be on the charts because I'm going to want to chop these orders. It's going to place new pending orders at these highs and lows. I do not want to trade these today. It's far too volatile, too whippy. Anybody got any FX pairs I want to look at? The other thing that's been sort of under the radar a little bit this morning, but it's obviously this EU deal. EU is either going to come back with aggressive counter tariffs within the next 2 weeks, or they're going to want to talk to Trump about the deal, basically. But they've been in negotiations since the initial tariffs were released ages ago. And the EU basically are getting the real rough end of the stick from Trump at the moment. So we've got the potential here for this to go very, very wrong for the US, because the Europeans have got a lot of ammunition that they can throw back from a trade perspective. So just keeping my eyes peeled on this today, because obviously we had the letters going out on Friday for Brazil, Canada, and Europe. There's a lot of negotiation going on with Brazil, it seems, but the rest of it seems to have just gone quiet. So there's go back and look at what happened when we had the initial round of tariffs going in, and all the Trump announcements. This is now reborn. We're back in, holy crap, we're doing loads of tariffs again. So just got to be a little bit careful with what's going on with the Eurozone at the moment. Euro pound is pushing at the minute. We've got a very weak pound at the moment. So technically, I'll have a look at that in a sec. High, low, lower high. Not that you can really read market structure into that, but we'll see. Euro pound. At the moment, we're obviously extended. Just get rid of that line, that extra line from this morning. This here was the announcement that Trump made about not helping the Eurozone basically with Ukraine and with military spending. So they did a massive bond purchase in the euro. So before that happened, we were very sort of neutral euro pound, which we usually are. You can see I took some longs here and got out very nicely. Since then, I haven't got into this because I can't really read what direction this is meant to be going in at the moment. The pound is very weak. It's going to stay very weak. But that doesn't mean the euro is going to strengthen in any way, shape or form. This could be back down here with these trade negotiations any second. So I would be looking basically, if you're shorting this, which I presume you are, if you're not already out of that, scaling in up to not the all-time high, but up to that high, which is kind of high of the year from April. So that area there, basically, this was a one-off big bond purchase. So you can't really read the price action as normal bank and institutional movement. It was panic. But it did come back up into there, technically. So 200 ADR to the upside really is all you should get out of that before it starts to come back down. It is actually already stalling out at last week's, sorry, that's not last week's high, that's the 2-week high. So that's last week's high, 2-week high. We had a big ADR move on Friday, which took us extended. So look at the wicks on this thing, though. Look, it's absolutely ugly. Awful price action. Look, it's just wicks. Literally wicks. Just non-directional, total indecision at the minute. Although I would say that last hourly candle is obviously more decisive. You got a beautiful 3-bar reversal, look. Beautiful. Look at that. Absolute text. It's textbook day today, isn't it? Textbook 3-bar reversal. Push, pause, pull. Yeah. Close above that high, weak 3-bar reversal. Sorry, low. Close below that low, strong 3-bar reversal. Somewhere down into propulsion to get out. It's nicely extended as well. Yeah. That is euro pound. Let me just quickly get back over here because I need to cancel some of these orders. Okay, so there's no trades on these. So we've done basically, look, so that's 40% of ADR. we've done more than 40% of ADR in the first 30 minutes. The same here. We've done way more than 40% of ADR. In fact, we've done more than 50% of ADR. S&P 500, we haven't quite done it. So technically, if you look at the price action on the S&P 500, we're back to where we were at the open. Yeah, so there's your open. I mean, we haven't gone anywhere. We spent half an hour in whipsaw. So that 30-minute chart will look like that, which is obviously not particularly exciting, is it? So there is an option to take a range break on the 30-minute. Actually, it doesn't quite look like that, because we did pull down, but it's just whipsaw at the moment. So there is an argument for taking a break of that in one direction or the other, if you want to. But for me, just going to stop out. Mess. For me, I'm just going to leave those today. I'm up on the day. I don't really want to jeopardize today's profit. Obviously, if you think about a rotational market or a D-shaped market, all you do is you rotate the highs and lows. So what we've just done there is we've attempted to go long, failed, attempted to go short, failed, attempted to go long, are failing. This is basically where the market limits are at the moment. So if you look at a D-shaped volume profile, we've put it in. So the rest of the day is rotational with inside that high and low. So you'll find potentially today a lot of market participants will be selling the highs and buying the lows just to stay in rotation, just to get orders executed. Could break out, but that much volume in the first 30 minutes is probably indicative of not really directional, is it? Not really going anywhere. So last 15 minutes, we are literally sitting there doing nothing. So it's a flip of a coin day today. Not really conducive to trading. Likely to stop out. This, I am stuck. So you're stuck in Euro Pound, are you? Okay, so you're probably in from here, are you? I guess. Somewhere around here. So that's an ADR. So about 3.5 ADR, roughly. So didn't get out on that. I would have got out on that, but if you didn't, obviously, you haven't had an exit, really. So, yeah, that is realistically what you'd be looking at, I think. So 5 ADR from there will take you up to that high, which is your April yearly high. If it doesn't pull back from here, I think your real main hope here is Trump and the tariffs. If the EU, it's difficult to know how the market will see the EU retaliatory tariffs. If the EU decide to put retaliatory tariffs in place, it could really harm the EU, but it could also really bolster it. If it spikes straight up into that level, you're going to hit an iceberg up there, which will drive that right back down again. So, so yeah, it's a tricky one, that. The euro's been uncharacteristically strong since they froze interest rates. Usually that sends the euro into rotation. But the euro, since they froze the interest rates, which we were expecting anyway, has become a little bit more bullish. If you look at all the euro pairs, they're all, slightly bullish. Euro Swiss isn't, because it's the same thing, euro and the Swiss. But it's got a slight bullish tinge to it since the interest rate freeze, which is unusual. But the EU also has no strength. So what you're really looking for with anything you're trading against euro's neutral at the moment, really. So anything that is getting any kind of strength. So for example, if we get some decent news on the pound, which just about to stop out on that. If we get any decent news on the pound on the CPI, we got Bailey speaking on tomorrow evening. But if that pound CPI figure, that's forecast to come out inflation as 3.4. If that comes out at 3.3, that pound is going to drop. But if that comes out at 3.4 or maybe 3.5, which is possible, that pound is going to really rally. So what you're looking for on Wednesday is for a forecast or above forecast pound figure that will drive the euro pound straight back down again. If you look at the yearly figures, it is not unusual for us to underestimate our inflation. We've done it for the last 2 months, basically. So it's kind of a trend at the moment of getting it wrong and, overshooting inflation. So, yeah, there's a good chance that you might get a 3.5 on that. If you do, you're going to get some strength in the pound when that euro pound is coming down again. But where to? Don't know. It's a tricky one. Winnie, Euro CAD and Euro odd. Euro CAD. I've got shorts on that at the moment. Looking for it to pull back down into propulsion. Again, euro strong. Exactly the same thing with this tomorrow. CAD CPI. We want higher than anticipated CPI numbers for the Canadian dollar and for the US dollar. That'll be down there. Lower than anticipated, it'll be up there. It's not going to be. Inflation is either going okay or not okay. It's not going really well. Yeah, no country is having really good inflation at the moment. We've got too much conflict. We've got too much debt. There's no country that's going to turn around and suddenly get a way better than forecast inflation figure. Slightly better, maybe, but way better, no. So there's much more chance of that with inflation going up, forcing interest rates up, forcing strength into a currency, than there is of it going the other way. Same with the euro odd. Euro odd, unfortunately, obviously the Australians decided to change their interest rates, stopped out of that NASDAQ. Pile of crap. Not trading that anymore today. So obviously this is what happens when you get an interest rate decision that's not forecast. Big, strong move. So pullback, continuation short on the euro odd. You should be in short on that anyway, from up here or out of it. Actually, you might actually, you're probably back in long, aren't you? So that's just had a reversal alert on the 4 hour and the hourly. So I'll be looking at this repulsion gap really is maximum upside on this. This is strong at the moment, the Australian dollar. The Aussies decided not to change interest rates, which was forecast. So they said they were going to drop the interest rate. They didn't. So that makes it incredibly bullish. The Australian dollar is going to be continuing strength foreseeable until the market's ready. The markets have readjusted. That's, I would say you've probably got a bit more readjustment to do on that. But, at the moment, it's impossible to tell. Changes every 5 minutes, literally. Trump's administration, anybody that trades any kind of fundamental analysis will tell you that it goes out of the window completely when Trump comes in. And if you've traded through Trump's last presidency, as I did, it's not normal trading. The world doesn't work on normal interest rates and inflation. It works on Trump. So it's a very, very different thing. When you get something unexpected happening to a currency based on a normal fundamental, it will get overbid, if you like, by something that Trump says. Australian dollar, New Zealand dollar, Canadian dollar, all commodity markets. So anything that he says to affect commodities, copper last week, 50% increase on tariffs, that is going to way outweigh anything that they do with their internal fundamentals in Australia. Yeah, they mine a lot of copper. The copper rate just went up. So you've got a huge increase in the Australian dollar because they did not change their interest rates as forecast, but they've now got 50% extra to pay on their exports of copper. That's negative. So you've got a huge positive matched with a massive negative. He can outweigh anything. Yeah. So anything that goes on with any currency, he can basically trump it. Got the right name, isn't he? Aussie dollar CAD, Vitaly wanted to see as well. Again, nice reverse alert on this one. Extended on Thursday, into Friday. Range, 2 months, same thing. So market structure's bullish at the moment, as it will be, because the Australian dollar changed its interest rates, or didn't change its interest rates rather. So it's bullish. So pullback, continuation. Unless CPI tomorrow comes out positive for the CAD, in which case you're going to be back down here. Fundamentals move the markets until someone says they don't. That's the way it goes. So tomorrow you've got that CPI number coming out. We are all forecasting the same. So your CAD CPI month on month is forecast to drop, which will be bearish Canadian dollar. Your median annuals and your trimmed annuals are forecast to stay the same, which is neutral. And then your common, which is less important, is forecast to drop as well. So if that comes out at 0.4, 0.5, that will come out probably at about a 2.8 or something, which means that if they come out as the same, you're going to see very little movement. If that, however, comes out somewhere in the region of a 0.6, that Canadian dollar is going to fly. It might, even if we get a 0.4, 0.5, it might fly. So, but then again, it will also get dragged down if these numbers miss. So it's a massive day tomorrow. Could be a huge whipsaw. I'm glad I'm out of that lot. Don't remember why I didn't get out? Yes. If you missed your target, missed your target. But mind you, this is the thing. Targets are kind of discretionary, aren't they? So what are you in, euro, pound? It depends where your average was. If you got into it back here, on that, I would imagine. So your first entry probably would have been somewhere in here. Second entry there. That really brought you back to a break even on the first entry. So that was what you'd have banked. So you'd have been, depending on what your risk is, whatever your risk is, that is what your profit would have been at that point, which isn't great, is it? So it may, I mean, I would have been looking for a pullback down into there, or maybe into there. Whenever I've got two trades on, there's always the temptation to get out when you get back to the first trade and just take that one as profit and take that one as a break even. But what it means is the trade idea that you had is actually playing out. So it's always the urge is to hold it until it hits your target. That is the closest target. So I would have been holding it as well, probably down to there. That would have been your ultimate target to come and retest that propulsion gap. But it hasn't done it. So what it means is those targets are still in play. So now if you're in multiple trades, yeah, you are, by the time you get down into this area here, you're in profit, nicely in profit. If you still hold back down to those targets, that's big payday. Obviously, it takes time. You're looking at a 4 to 6 week trade. So you just got to hold it. But that's probably why you didn't get out, because you probably didn't see enough profit. And if you're using the EA targeting system, it probably wouldn't have had enough profit there to take it. So it certainly wouldn't with mine, because mine's set up to target at 1%. So that would not have been anywhere near one ADR. So that would not have been one ADR in profit at all. Pushing again now. There you go. So much for your textbook 3-bar reversal. Look at that, straight to the highs. So remember what I said about rotational market? This is a rotational market. That's where you sell it. If it's not a rotational market, this is the most ugly price action pullback you've ever seen in your life. Apart from China, as they don't report economic metrics anymore. I don't know what I was talking about then, Paul, but yeah, China don't report economic metrics. So one of the problems with financial analysis is if there's a mismatch. The trouble we have as when you're looking at fundamentals is the US lets us know everything. Everybody else doesn't. So you have this massive weighting of information that you get from the US. The US, I can't remember how many it is, but I think the US is on around about 20 to 30 news events a month. The yen has 2. It's a bit of a mismatch there, isn't there? You can't say, right, I'm going to compare the yen against the US dollar, because the yen's got 2 pieces of information. The US dollar's got 20 odd pieces of information. You can't compare them. So it makes it very difficult, technical analysis, fundamental analysis on anything like that. China is very much the same. But anyway, we don't deal with China. We don't trade China yet. BRICS. I will hold, and with some aggressive drawdown might work out nice. Yeah, so if you're doing aggressive drawdown control, I would say this is obviously a good spot to do it in, because we're at a weekly level. So we're at last week's high, basically. It's pushing up again now, look. But yeah, if that's going to hold, this is where you want your aggressives on. Oil's coming back down again. So this is where I'm looking for the oil buyers to step in. So if market structure is going to remain long, I want to be looking at a buyout of here. Load of rubbish today, isn't it? Okay, so we're just testing the highs. So there's your high of the day gone. There's a big pop there. So whatever was holding the market here has just gone. So either that is the end of that, and now we're coming back down again, or that is your breakout just happened there. Looks like the breakout, doesn't it? What a mess. Right, I'll leave it there. I'm going to come back on Monday. No, not on Wednesday. So we got the live room in the morning for members. I'm really hoping that this new website is going to be ready for Wednesday morning. I think it's mostly there. But I've been working on it this morning. It tires me out coding. They're just implementing a really massive AI update on it. So I get the feeling something's going to go wrong. But anyway, I might be in a position where I can take all the members through that on Wednesday morning. So I'm hoping that's what we're going to do on Wednesday morning. If not, I'm going to do some strategy development. So we're going to look at the potentially working more on the inverse ORB strategy that I was doing before, but we'll see. In the white room with black curtains at the station. That's a song lyric, Brian. Why are you singing? Did I mention a white room? Oh, I'm in the white room. I'm definitely in a white room. I haven't got any black curtains, though. I am quite close to a station. You must be a mind reader. Right. So good luck if you're trading this. If I was you, I would just stay away. Cream, my end of the pond. Yes. Not my type of music, though, unfortunately. If it doesn't go boom, 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 I'm not interested. So, yeah, basically, if you're going to trade this today, good luck. This is a wiki nightmare. So if it's taking off, go with it. But just make sure you've got wide stops on stuff today and do not get greedy is my advice, because this thing's very, very schizophrenic this morning. So doesn't really know where it's going. I'll be back on Wednesday morning and obviously Wednesday afternoon. We'll be looking at obviously we'll trade the US session again on Wednesday afternoon, see how we go on with that. If I have still got my funded account, well, my evaluation account, we'll trade that. I have a feeling that might be gone. So they've turned me into an aggressive trader. But anyway, I'll let you know on that on Wednesday. All right. So hopefully Wednesday morning members will be going through the new website. If not, we'll do some strategy development. Other than that, I'll be back Wednesday afternoon. All right. So have a good day and good Tuesday tomorrow. Make sure you're aware of those CPI figures. Obviously coming out, very important. And then I will see you guys on Wednesday. Have a good day.